What challenges are in the TPD discharge monitoring period? Imagine finally getting your student loans discharged because of a disability, only to face new hurdles that could bring those loans back. That's what the monitoring period was all about. When someone received a total and permanent disability discharge, the government wanted to make sure they still couldn't work full-time due to their disability. So, for a time, they checked in annually to see if your income stayed below a certain limit. If your income went over that threshold, your loans could be reinstated, and you'd have to start repaying again. Managing your earnings during this time was a big challenge. Even part-time work or occasional gigs could trigger a loan reinstatement if your income exceeded the set limit. That created stress for many, especially if their health improved slightly but not enough to return to full employment. Another issue was restrictions on borrowing more federal student loans or receiving teach grants. If you wanted to go back to school or change careers, these restrictions could slow down your plans. You also had to submit annual income documentation to the Department of Education. Missing a deadline or forgetting to send in the right paperwork could lead to automatic loan reinstatement, which added extra administrative work during a difficult period. There was also the risk of losing money. If your income exceeded the limit, your loans could be reinstated, and any payments you made toward the discharged amount wouldn't be refunded. This meant that if your circumstances changed unexpectedly, you could lose the benefits of your discharge. But recent updates have made things easier. Starting July 1, 2023, most borrowers no longer have to go through the 3-year income monitoring period. This change reduces the stress and uncertainty for many. However, if your discharge was based on a certification from the Department of Veterans Affairs showing you are unemployable because of a service-connected disability, you never had to go through monitoring at all. Your loans are discharged without any income checks afterward. If you're considering a discharge or have already received one, it's smart to know which rules apply to you. Keep records of your application and stay in touch with your loan servicer or the Department of Education. Being proactive and informed helps you avoid surprises and make sure you get the full benefit of your student loan relief. Overall, the monitoring period used to be a tricky time, with income limits, restrictions on borrowing, and the chance of losing your discharge if your situation changed. But recent changes have made the process simpler for most, helping you focus on your recovery and future plans.